A very good evening to you all, friends. I am Sanjeev Singer, Central Council Member, Chairman, Auditing and Assurance Standard Board and Sustainability Reporting Standard Board. On my behalf and on my behalf of my Chairman, Co-Chairman, CA Vishal Doshi ji, welcome you to this 31st physical oblique virtual program on auditing standards of the Auditing Standard Board in this council year. We have started a webinar series covering various auditing standards. Uh, the topic for the day is audit sampling and materiality in planning and performing an audit. So far, we have covered almost all the topics. And if any topic is left, maybe in the next one or two sessions, we will be completing the same. And apart from that, then we will start a series on CARO, on auditing aspect in Schedule 3, Rule 11E and F, and other aspects. We have received an overwhelming feedback for these programs, and we sincerely thank you uh, for uh, for attending and keenly participating in these webinars. Friends, we have also started an online panel of experts who is answering your queries on the statutory audit, which you may be facing during the course of the audit. Please avail maximum benefit of the same, and you can send your queries to the expert panel. The topic audit sampling and materiality are very, very important topics. Uh, why sampling is important? Sampling is important because the sample should be selected in a manner which is a representative of the population, and there should not be an element of bias in it. In what way an auditor should select a sample so that he is able to arrive at an audit opinion? So, to my mind, this is a very, very important aspect. And what happens if you find an error while checking that sample? Then do you extend the sample size? And if yes, then again, if you find an error, what do? Do you further extend the sample size? If yes, then what happens if third time you find an error? Do we stop the reliance on the controls? What are the alternate audit procedures that we apply? So that's a matter of discussion in this topic. As far as materiality is concerned, again, we know that materiality is fundamental to the entire accounting and auditing. If an item is not material, unless it is required by law, as auditor, we will ignore it. But how to define materiality? What are the various types of materiality? So we talk about a performance materiality or planning materiality. Then we talk about tolerable error. And then we talk about SAT, summary of audit differences. So how should we determine our materiality? Should it be based on the assets? Should it be based on revenue? Should it be based on profitability? And what are the various range for selecting this PM, TE, and the SAT? And what happens if an item is below SAT? What happens if an item is above SAT and up to tolerable error? And what happens if the item is above the tolerable error? We also need to keep in mind if the cumulative effect of the error which we encounter is more than the tolerable error, then and the management has not taken a corrective action, then whether an auditor needs to qualify the audit report. So these various aspects are covered in the auditing standard on materiality. We need to keep materiality in mind while planning, performing an audit, and also while giving our audit opinion. To deliberate on these two topics, we have two eminent speakers, renowned auditors with a good number of years of experience under their belt, CA Praveen Tulshan and CA Vijay Vadvani. Uh, Thank you, Praveen Bhai. Thank you, Vijay Bhai, for taking out time to speak to our members. And for giving the keynote address, we have a very esteemed council colleague, CA Chandrasekhar Chitleji from Pune, who is also the chairman of the Direct Access Committee. And a special thanks to him because today is his marriage anniversary. Still, he has taken time and be with us. Chandrasekhar Chitleji has also headed the Corporate Law Committee of the Institute of Chartered Accountant of India. It is his second term in the council, and he has been associated with many key initiatives which are undertaken in the various committees of the institute. Chandrasekhar Chitleji has been contributing to the core in the various meetings, various groups of the council. And it is really a matter of pleasure and pride for all of us that he has agreed to give the keynote address. So before we invite Praveen Tulshan ji and Vijay Badwani ji, I would like to invite Chandrasekhar Chitle ji for his keynote address. Over to you, Chitle ji.
Yes. Thank you, Sanjeev bhai. You have really dealt with the topic of audit sampling and materiality in planning and performance of audit in a nutshell. Let me talk from a different perspective, therefore, that I had been sitting on disciplinary benches as a judge. And then what we have noticed, we have noticed that whenever there is an allegation of negligence, there are two sides of professionals defending their cases. There is one set of professionals who will inform us maybe within 2 hours, 3 hours, how they have burned midnight oil, how they were toiling their nights at the audit place, what all steps they have taken, etc., etc. And that would take generally 2 hours, 3 hours to explain how careful they were in conducting the audit. But there is another set of auditor who will talk only for 2 minutes, but they will place on table 4 or 5 audit working files. And those working files will contain various aspects like audit planning, who did what work, what were the notes, what were the discussions, in case of contentious issues, what view was taken, whether any expert opinion was taken, what was the management's view. So all these things were available in those files. And needless to say, in quotes, it is that set of people who are well supported by the documents win the case and not those who try to do so orally. So I'm sure that this Auditing and Assurance Standard Board is trying to bring home the importance of doing this particular documentation. And while doing so, documentation, considering the volume of work that is required to be undertaken, the limitation of time, the limitation of manpower, I think we resort to certain techniques. Sampling is one time-honored technique. In fact, Bombay High Court in case of Trisure Soya has exonerated a chartered accountancy firm when audit was done on a sampling basis and errors were found on all vouchers that were not covering the part of sample. But then when we say that, okay, sampling is a time-honored audit tool, really one has to know scientifically exactly how the sampling is to be made. Because if you do sampling in a biased manner, whether that would be admissible as an evidence would be a question mark. Therefore, as an institute, we have several standards on auditing, and one of the standard deals with this mechanism of sampling. So the sampling done in an unbiased manner will certainly go on to protect the auditor if the conclusion is done on the basis of those samples. And we have with us Pankaj Tulsian, a seasoned chartered accountant who is expert in auditing, to enlighten us on this particular topic of audit sampling. Another aspect comes as materiality in planning and performance of audit. Of course, ultimately, when we report, there also the material misstatements are required to be reported. Maybe those statements which are not so material, or those errors and omissions which are not so material, they are dealt with. Otherwise, there are procedures laid down for that. Maybe one can write management to about those deficiencies and give them caution. But then, while undertaking any audit, unless you focus on material items, your audit conclusion may go haywire. So in order to have an appropriate audit conclusion based on the material aspects of that particular audit, one would be able to do justice to the report, whether the true and fair view is reflected or not. And for this purpose also, the ICI, through our Auditing and Assurance Standard Board, has issued a standard. And so let us try to understand what are the nuances in which the materiality and the two aspects, that is planning and performance of audit, is to be considered. And besides that, in both the cases, audit sampling and this materiality aspect, how one should preserve the documents so that it will, at a later date, if so required, go on to prove that yes, this was the manner in which sampling has been made. And if one has to do audit of those samples, whether the conclusions drawn by a auditor and drawn by some other party, they are in agreement or they are at a variance. Because nowadays the regulators have become very sharp. They are also aided with electronic tools. So they are also engaging expert professionals for the purpose of finding out deficiencies. We are aware that NAFRA and SEBI, they are having uh, details about all the audits and are keen to find out the shortcomings. And whenever they find such shortcomings, they are invariably referring the matter to the institute. At institute, we have FRRB, Financial Reporting Review Board, which reviews all these reports. And then if the error is material, then in that case, maybe even a disciplinary action is recommended. In other cases, a caution letter is sent to the auditor. So considering the volatile atmosphere, the risk in audit increasing, I think these are the standards which would come to the rescue of the auditor in establishing that he has performed the audit as was expected of him under the law by letter and true spirit. So I'm sure the faculty will definitely take us through on the subjects allotted to them, and we also will be enlightened on these aspects of auditing. Thank you.
Thank you, Chitleji. Your correlation with the disciplinary is, I think, really will add value that how in the disciplinary benches we view it. So thank you very much, and thank you for taking out time. Now I would request our speakers, Praveen Tulsianji and Vijay Vadwaniji, to kindly start their deliberation in whatever order they deem fit. So Vijay or Praveen, who would like to go first?
Thanks, Sanjeev.
Sir.
So I think I'm scheduled to be first deliberating on audit sampling, but it was a wonderful introduction from your side and very good perspective from Chitleji. And Chitleji, wish you a very happy marriage anniversary to start with. So let me just put presentation on my screen. Just give me a second so that at least it's working.
Make it full screen, sir. Yes, sir.
Yeah, is it visible?
Yes, sir. Yes, sir.
Good evening to everyone. It's my pleasure to come and talk to all of you and discuss about audit sampling, which is SA 530. As Sanjeev ji and Chitleji already highlighted that how important it is from audit perspective, not only in conducting audit, but also defending if there is any disciplinary proceeding. Okay. So on overall basis, audit sampling plays very important role while conducting audit. So in this particular topic, what we are going to do, we are going to touch upon introduction and scope of this particular essay. We will be talking about objective briefly, while it is already touched by Sanjeev ji and Chitleji. We will be covering few definitions, which you may be already aware, but we will deliberate on those definitions. We will cover how sample has to be designed, what should be the size of the sample, and how we should make selection. Once done, how should we conduct audit procedures, and then how will we evaluate the results. So we will cover those in detail. We will talk about some examples, how we should evaluate results on overall basis. And then we will cover some of the questions if there are any before we end the session. But make it participative, keep asking questions through chats and others, and we will be able to answer as and when we get time. So I think from scope perspective, SA 530 is applicable wherever we as auditor intend to use audit sampling. So if we are thinking that, okay, yes, we will do audit sampling based approach in our audit, SA 530 is applicable. Now what it covers designing and selecting audit sample. What should be the sample? How should we conduct? What should be the population? What should be the size? So effectively, designing and selecting audit sample will cover all of those. Once we have selected the sample, then we do the testing of control and test of details. And finally, we will evaluate results. So the standard provides you guidance on how should we evaluate results coming out of our sample test. This definitely complements audit evidence, because whatever we do through our sampling approach will become our audit evidence to form an opinion. objective is definitely, as we already covered, that okay, yes, it's doing the audit sampling to provide a reasonable basis to draw conclusion about population from which the sample is selected. Effectively, as the name suggests, what is audit sampling? So if we cover definition 1, the standard says that okay, application of audit procedures on less than 100% population. So we as auditor have two choices, right? Either we do 100% population test. If we are doing 100% population test, we don't need to apply audit sampling. But if we are testing less than 100%, then we are applying audit sampling to say that okay, all sampling units have the same chance of selection, and to provide a reasonable basis on which to draw conclusion about entire population. So 2 points which are very, very important in this entire definition. One, all units should have a reasonable chance of selection. So there should not be any bias when doing the sample selection, and we will be covering this in detail. And second, the sample should be representative of the population so that you can make a reasonable basis on which reasonable conclusion on entire population. So these are the two important aspects which we need to consider before you apply audit sampling. That's what the definition is. Population is the 100% population on which you are applying a sample to draw conclusion on that particular population or entries. Definition 2 talks about sampling risk. What is the risk? What is sampling risk? When we are taking samples as opposed to 100% population, there is definitely a risk that our conclusion may or may not be appropriate, as far as entire population is concerned, because we have applied sample. So that's why there is a sampling risk. Now, from the definition perspective, if we read on the slide, it says that okay, risk that auditor's conclusion based on sample may be different from the conclusion if the entire population were tested. So if we test 100% population, we reach to X conclusion, but because we applied sampling approach, we may reach to Y conclusion. Now that's what the sampling risk definition is all about. Now there could be two conclusions. One, on test of controls, we applied sample, and we may conclude that okay, either it is more effective than actually, okay, or less effective. In both situations, so if we conclude it's less effective, it will lead to additional work, because then we need to do more work on test of details. If we conclude more effective than actual, so there was a sampling error, that's why we concluded more effective than actual, it will lead to inappropriate audit opinion, or it will increase the risk of material misstatement. Similarly, in test of details as well, if we conclude that the material misstatement does not exist, okay, when it may exist, in that case, it will be inappropriate audit opinion. Otherwise, if we conclude less, in that case, it will be additional work. So sampling risk is there, and we need to mitigate that sampling risk by doing appropriate selection, identifying population, appropriate sample size, and more importantly, unbiased approach. Because majority of time, the fundamental point, what you will notice is that we may be biased knowingly or unknowingly while selecting sample. Non-sampling risk is risk relating to any other procedure, any other judgment made as part of audit other than the sampling risk. So that becomes the non-sampling risk. Say, for example, we identified something as significant risk, which ideally it should not be, or other way around. But that has nothing to do with the sampling risk, because the sampling is appropriate, but still your conclusion may or may not be appropriate because of that other risk. Anomaly is defined as a misstatement or deviation. Misstatement, we will cover in subsequent slides, can happen in two ways. One, in test of controls, and another one in test of details. Test of detail, it's more quantifiable. Test of control is more about the control effectiveness. Sampling unit means individual item constituting a population. For example, if a company has 100,000 sales invoices, each invoice may become a sampling unit. If you have 15 bank reconciliation every month, you may decide that that either 15 bank reconciliation itself multiplied by 12 is your population, and each bank reconciliation is a sampling unit, or you can define that it's a monthly exercise for all 15. So you will decide that, okay, maybe the month-wise bank reconciliation is a sampling unit. But sampling unit determination is very important because that's how you will do the sample selection. Definition 4, which standards cover, is random selection of samples item. Effectively, what it says is that we need to ensure that, okay, each and every item in the population should have a fair chance of selection when we are applying it. So that's how it is either a random, it should be random selection of sample. We can either do a statistical sampling or we can do non-statistical sampling. There is no mandatory requirement that you should do statistical. The mandatory requirement is to make sure it's an unbiased sample selection. It's more like a random sample. Now, just to share a few examples, let us assume we somehow decide that that we will do sales vouching for first 15 days for every month. Okay. Now that may or may not be a random selection, because in that case, you left out the second period completely. Maybe there was some kind of a bias when you were selecting a particular sample. To say that I will audit all high value sample in control testing may or may not work for you, because in that case you're leaving a lower value item and that particular population has no chance of getting selected. So that will not qualify to be a random sample. So some of these things may come and haunt us later if there is any inappropriate conclusion is reached, after doing sample testing. So we need to be very, very careful, and we should be purely random approach, from our perspective, should be applied for selection of sample. Now, definition 5 talks about stratification. When we talk about stratification, it means that, okay, say for example, we have sales, and we may have sales of 3 types: 1, export and domestic. You may have a control environment which is different for export sales and different for domestic. In that case, you may divide the entire population into 2 parts: 1 for export and 1 for domestic. Similarly, you may have purchases or expenses which may be covered through a purchase route vis-a-vis the direct debit to expense item. In that case, you may stratify that particular population into subpopulation. So that's what the definition is, that, okay, is process of dividing a population into subpopulation, and each of that subpopulation will become a sampling unit. It's a group of sampling units. Effectively, that becomes a population from where you need to take out a sample. Stratification is very important, because if you don't do stratification, you may end up concluding that the samples which you have selected represents entire population, while the control environment may be very different for those 2 stratified populations. A tolerable misstatement is the monetary amount which we set as auditor to say that, okay, if there is an error which is found up to this particular level, we are fine with it. Still, it's not a material misstatement from overall basis. We are ready to live with it. That's what the tolerable misstatement is. And in materiality standard, subsequently, I think Vijay will cover that how you determine the overall materiality and how you evaluate your results finally, whether there is any material misstatement or not. Tolerable rate of deviation is considered from the internal control perspective. It is the rate of deviation. So say, for example, if I'm testing 60 samples for control, and I have documented that, okay, we expect that, okay, maybe 1 sample will not pass the effective control test. In that case, my expected deviation is 1. Okay. However, if we find 3, in that case, the control is not effective. So either we increase the sample size to support our audit inclusion, or we say the control is not effective at all, and we do test of detail, more test of detail. I think the first step in doing the audit sampling is to design sample, determine the size, and then actually selecting the sample. So whenever we do any kind of a sample, 2 or 3 things to be considered before we start picking sample. One, what is the purpose of this audit procedure? Is it a test of control or is it a test of detail? Once we have determined that, okay, yes, what is the purpose, then we understand the population. Why understanding of the population is important? Because once we understand the population, then only we can determine whether we need to stratify the population or we don't need to stratify the population. What should be the sampling unit in that case, from that perspective? That's how you determine. Because once you understand population, once you understand that, okay, yes, what is the purpose of that particular audit procedure, you will be able to take a decision that, okay, what should be my sample strategy? Because that's when you reach. So as of now, in the first step, you're only understanding the purpose and the population, determining that, okay, whether you need to do the stratification or key item just to take it out. And then you need to say that, okay, yes, what should be my sample strategy? Now, sample strategy will be determined by auditor's judgment, not only based on the population, but also based on the risk associated with that particular account balance or population, risk of material misstatement or risk of control ineffectiveness. Now, once we have determined that, we will do our sample strategy. Sample strategy will include whether we should use statistical or non-statistical, right? It's only dependent upon auditor's judgment. There are lots of tools available to facilitate statistical sampling nowadays in the market, or you can also do the random selection of your own. Once we have understood the population, once we have understood what is the purpose of this particular thing, evaluated basis the significant risk and other judgment considerations in determining the sample strategy, we reach to the stage 2, which is a sample size. So what should be the sample size? Now, sample size depends upon what is the risk associated with that particular population. Risk of material misstatement or risk of ineffective control. Once we decide that the risk is lower, the sample size could be on the lower side. But if we say the risk is high, the sample size will be much higher. That's the starting point. The second is, if as auditor, I want to assess risk on lower side, in the sense the risk is high, but I want to have a tolerable error at a very lower level, in that case, I need to have greater sample. If I am okay with the higher tolerable error, I may take a lower sample. So from that perspective, this is the auditor judgment, depending upon what is the risk associated with that particular population and what is my assessment for tolerable error, whether I want to a lower or higher. Once we have done that, in that case, we look at the population and then we apply how you should do the sample size and how you should do the sample selection. Now, how would you do the sample selection? Because sample size is set, population is set, stratification is done, risk assessment is done. We need to select, but there is only one fundamental rule. It should be unbiased and we should take representative sample. Whether we apply statistical, whether we apply non-statistical, it should be representative and unbiased. So in that case, how would we do it? And we have seen that, okay, yes, in many cases, slightest oversight may result into bias. As I said in my examples earlier, if we are selecting only first 15 days of sale for sample, we are biased while doing sample selection. If we are selecting only high value items for test of controls, we are biased. While you may argue that, okay, yes, if I have covered 90% of the population, right, from that perspective, then why should I get into this, right? As long as you are applying the sampling approach, it should be unbiased. All population, whether it's a smaller value number from test of control perspective, I'm saying, or a higher value number, all should have same level of probability and chance to get selected, because what you are concluding is that the control is operating effectively irrespective of the size or amount of that particular population item. If you are applying statistical tool, it becomes much easier. If you're applying judgmental, lots of people, what they do is they apply judgmental, but then they also use Excel or some kind of a random numbering. Maybe you can do that of your own. But judgment should not result into bias at any stage. So there are different methods of selecting sample, which are highlighted on this particular slide. If you see, either you can do random, which is through random generators, or you can do systematic selection, which is a sampling interval. So say, for example, your population, the historical method is your population and you want 25th, 25 samples. Let us assume you have 10,000 invoices. In that case, you will have every 400th item as sample selection, and the first one you pick as a random, and then every 400th will be your sample selection. Monetary unit sampling, it's a weighted selection from the sample size. You can do it haphazard selection without following a structured approach, but at least you're not following a particular pattern. So picking sample, basis your haphazard approach. Block selection, it means that, okay, you say that, okay, yes, I will pick any 5 continuous samples. So in our example, we said every 400th, you can say that, okay, 5 samples thereafter. So effectively, you will have 5 blocks. In that case, so you divide 10,000 divided by 5. So effectively, then you say every 200th item will next 5 items you will select as a sample. But in nowhere you have any kind of a bias while doing sample selection. Method could be different, applied by different auditor in the same circumstances, but ultimately it should represent the entire population as well as unbiasedness. Now, once we have done the sample selection, we apply, whatever procedures we want to apply on that particular item. If we are doing test of controls, then relevant control will be tested against that particular sample. If we are applying test of details, then attributes of test of details will be applied against that sample. So say, for example, if we're testing sales for test of details, and we are doing a cutoff testing, whether the delivery has happened before 31st March of that particular year. In that case, for that particular sample, we will test whether there is a delivery receipt evidence available for delivery happened prior to 31st. If procedure not applicable to selected item, then we have to perform a replacement item. So we can't say that, okay, we selected 25, but this invoice was cancelled, say, for example, and this particular procedure is not applicable, still we will take a credit. We can't take credit if we have not applied that particular procedure. If we are unable to apply procedure or alternative procedure in some circumstances, say, for example, voucher is not available, okay, we have selected, but that particular documentary evidence is not available, then it will become a deviation or misstatement. We will not say that, okay, yes, this sample has passed, because we were unable to test it, so we didn't find any exception. So that's why we can't say that, okay, it has passed. We have to say that, okay, this is a deviation or misstatement. I think from overall perspective, once we have tested items, so till now what we have done is we have said that, okay, yes, there are various definitions covered in this particular standard. Before we start doing any kind of a sampling, we need to decide on sampling strategy. And sampling strategy is decided by 3 things. One, understand the risk associated with that particular population. Understand that, okay, whether you're doing test of controls or whether you're doing test of details. Once you have done that, then you decide that, okay, whether you want to do statistical sampling or which method you want to apply. And then you say that, okay, yes, what is your sample size? Sample size will depend upon the risk associated with that particular population, as well as what is the level of comfort we as an auditor wants to achieve by doing that sample. If we are happy with the lower deviation, we need to have a higher sample. If you want, if you are happy with the higher deviation, then we can take the lower sample. Once we select sample, then we go to perform procedures. Once we perform procedures, then we evaluate deviations and misstatements. So one of the important point, what we do is, let us assume that, okay, we were doing, and I'm just sticking to the sales example in my this thing so that it becomes much easier to follow. But say, for example, in sales invoice, we noted that the sale price agreed with the customer and sale price on invoice is not time. Let us assume in out of 25 samples, we noted that in a couple of them. Now, what we need to do is we need to first investigate why that has happened and what is the reason for that particular deviation. If, and there could be multiple reasons, but let us just take for the example's sake that, okay, that happened because there was a revision in order and that particular revision was not captured in the system. If that is what the case is, we will obtain that revision in the order, evaluate it. But if we are doing testing of control, then we will go back and see whether that revision angle, okay, is added in the control or not. If it is not there and in this revision is not processed in accordance with the control documentation, we will highlight this as deviation. If it was for test of details, and if it had any kind of an impact on financial statements, say for example, because the rate was wrong and that resulted into 1,000 rupees understatement or overstatement of sales, we will evaluate that as a mistake. Now, once we have identified that, yes, this is the deviation and this is the mistake, and if we conclude that, okay, this is, we need to conclude two things. One, is it an exception, or whether it is likely that it may be a common feature and it may apply to entire population. If that is what the case is, we need to extend our audit procedure because our sample test has failed or has not given us appropriate audit evidence to conclude on that particular topic. That was one thing. And the second one is we evaluate what is the possible effect on the purpose of audit procedure and other areas of audit. So if sales is understated, it may have impact on your debtors as well. It may have impact on tax as well. It may have impact on other areas as well. And we don't know what is the nature of deviation. Let us assume another example could be there is an error in control assessment where there is a control saying that one person will book the entry and other person will approve it. And what you noted out of 25 samples, that the preparer and approver was one person in one case. Now, in that case, you need to evaluate that, okay, whether this is happening in other areas as well, or whether this is only one of item which happened over here. So now that deviation, misstatement, and overall assessment requires audit team to take appropriate level of steps, whether it's extending the audit procedure and also evaluating what is the impact on the overall audit procedure for that particular account, as well as whether it has any other implication on other areas of audit. In extremely rare circumstances, deviation is an anomaly obtain high degree of certainty that it is not representative of population. So you may also conclude, in some cases that it is not a representative of population, and then we perform additional procedure to understand that, okay, yes, it will not affect the remainder of population. I give you an example over here. If you are testing that preparer and approver test, or in IT system nowadays, we may test as part of control that all logins are approved. Okay, the login rights are approved by IT team, and you may see that, okay, yes, there may be a couple of unapproved login rights. Let us assume. What you can also do is you can do additional procedure by taking all entries posted or prepared, okay, by those two login rights, and can review and get a comfort on remainder of population. Now, projecting misstatement, as far as test of detail is concerned, it is required. So say, for example, if you get an error of 1,000 rupees in sales, you need to project it based on the judgment that yes, how much it is expected to be expected to impact on overall basis. If it's immaterial, you can ignore it. Otherwise, you need to take it through the materiality assessment criteria, which I think we will, or misstatement assessment criteria, which I think we'll be covering later. But on test of control, there is no projection from the quantification perspective is necessary. As I said, if your expected deviation was 1 sample out of 30, and if you get 2, you effectively conclude that either you need to extend the sample size by the same number or higher number, or you conclude that that the control is in effect. So this chart, whatever we just discussed, this chart captures our conclusion. It on the left-hand side, you see that there is a test of controls. If you have a high sample deviation, as I said, instead of 1, maybe 2 or 3, it will increase in assessed risk of material misstatement, unless we have any further evidence to support or substantiate that the risk is not there. Okay. But the first point is, once you conclude that, okay, yes, there is a high risk of deviation, you immediately get into a conclusion saying that, okay, yes, there is an increased risk of material misstatement, unless proved otherwise. Similarly, in case of test of details, if you have unexpectedly high sample misstatement, it may cause to believe that the class of transaction account balance is misstated. So in sales, say, for example, the company has a 100 crore sale, and you found that, okay, yes, 1 crore sale was misstated through your test of detail sample. You don't know, what other aggregate amount of misstatement can be there in 100 crore. So you need to perform additional procedures to get comfortable that yes, it's not more than 1 crore, or if it's more than 1 crore, at least you have identified the entire misstatement. This is also covering that, okay, yes, if your projected misstatement plus anomalous misstatement is greater than the tolerable misstatement, then sample does not provide. So the conclusion is very clear that, okay, if your projected misstatement is more than tolerable one, you don't get it, right? Because in that case, the sample conclusion is not appropriate. Similarly, if you have a closure projected plus to tolerable statement, the more likely that the actual misstatement may exceed the tolerable. So you do some additional procedure, but not conclude that, okay, yes, it's not effective. Always consider before concluding anything, is there anything else what we can do as part of audit procedure to obtain additional audit evidence which may reduce the risk. That is very, very important, depending upon materiality, risk assessment, automation, manual, various other factors. I think that's all what I had to cover as part of sampling, but we'll be happy to take any question if there are any. Let me just go to chat box.
Thank you so much, sir. Sir,
There
can
are
you hear
questions
me?
in chat box. So,
Sir, thank you so much, sir.
my pleasure, sir.
Sir, there is one question. Sample size of electronic transaction in case of the specifically banking. Could you please elaborate regarding the sample size of electronic transactions relating to banking?
So as far as sample size from electronic transactions are concerned, it depends upon what you're testing. Generally, if you have a configuration control, okay, in the sense, say, for example, the interest rate is changed at a server level, and irrespective of the account, right, the interest rate is applied on entire loan portfolio, okay, of that particular bank. It becomes more like a configuration control. In that case, you can test one sample.
Yes,
But
sir.
if it's a transaction level control, right, which is changing with every transaction, right? It's not actually IT. It's only that, okay, it's processed from that perspective. You in that case need to do the appropriate sampling methodology as per risk assessment and other stuff. One may not be appropriate. So I think you need to distinguish, because in IT, one of the risks what you always carry is, one, is it a configuration control, or is it a manual come uh, uh, automated control? Okay, because sometimes you have a semi-automated as well. As auditor, we may get impression that, okay, this is automated, but actually that is not automated, because the data entry may be manual, and then only they do processing. So to that extent, we need to differentiate. But if it's a configuration control, I think one sample should be enough.
Okay, sir. Okay, sir. So do these standards apply to the trust and other NGOs which are also registered?
I think wherever audit is applied, from that perspective, while it may not be specifically, but wherever audit is applied under ICA guidance, all these standards can be useful and applicable, right?
One last question, sir. How forensic audit, post-audit carried out by the forensic auditor view the statistical based formula as compared with the professional judgment?
I think there is no hard and fast. Definitely anything where there is no judgment involved will always be considered to be a better audit evidence to start with. Like we always say that the external evidence is better than the internal evidence. But even if you have applied judgment, that doesn't mean that, okay, yes, that is not acceptable, as long as the rationale for that particular judgment is well documented, and you have demonstrated that, yes, it represents the entire population and there is no bias.
Yes, sir. Yes, sir. Yes, sir. So these were the questions relating to, sir, audit sampling. We have gained a lot through your deliberation, sir. On behalf of AASB of ICI, I extend my heartiest thanks towards you for sparing your valuable time, and of course acceding to our request on a very shorter notice, sir. Thank you so
My
much,
pleasure.
sir. Thank you so much
My
for
pleasure.
wonderful
My
deliberation,
pleasure.
sir. Thank you, sir. Thank you, sir. Thank you, sir.
Thank you.
Moving towards the next technical session, we are having with us another guest speaker, CA Vijay K. Wadhwani ji. So welcome once again, sir, on behalf of AASP of ICI. I extend my warm welcome to you, Vijay ji, for sparing your valuable time. And for the technical session 2, that is the materiality. So without wasting much more time, I request Vijay ji to please enlighten all of us on this very, very important essay that is relating to the materiality. Over to Vijay, sir, please.
Thank you. I will start. So is my screen visible?
Yes, sir. Yes, sir. Press 5. Yes, sir. Fine, sir.
Yeah. Yeah. So materiality in audit. So all we have been doing audit basis the materiality since ages. So since my first audit, so this materiality concept was there. But it is interesting to know that in earlier era, I mean somewhere in 1900, so this materiality concept was not there. And countries like Britain, US, they used to issue the report on true and correct view. But later on, I mean, they modified the report, means true and fair view. And somewhere in 1949 or maybe somewhere in 1954, they brought the concept of the materiality. And now every audit is being done on the basis of the materiality. So our standard 320, it deals with the materiality in planning and performing an audit. So these are the contents on this standard. So introduction, then professional judgment, various types of materiality, then benchmarking. Yeah. So this is the objective. So objective is to obtain the knowledge about materiality and how it relates to the planned audit approach, how auditors computed the materiality, different types of materiality, and when auditor need to reassess the materiality. So this is the scope of 320. So 320 deals with the auditor responsibility on application of materiality, and first of all, the identification of all materiality levels before the start of the audit, at the planning stage, and during the audit. And this SA 320 also, I mean, gives the way for SA 450, which talks about the evaluation of the misstatement identified during the audit. Now, what should be the auditor's call on the various misstatement identified during the audit? So that all depends upon the materiality level. So today we will focus on SA 320. Yeah, so materiality is applied both in planning and performing the audit and in evaluating the effect of the misstatement on the audit. So this materiality is computed at the beginning of the audit for the planning purpose. As and when audit progresses and the auditors feels that they need to revisit the audit materiality level, maybe at the top level or maybe at the performance level or at the site level. So they always keep on revise the materiality level. So one is identifying and assessing the risk of material misstatement, then determining the nature, timing, and extent of further audit procedures, then evaluating the effect of uncorrected misstatement on the financial statement, then forming an audit opinion. So during all these stages, so auditor need to consider the materiality level in mind. In the standard, it is very categorically stated that it is reasonable to assume that the users of the financial statements are very well aware about the economic the economic decision which they are making on the basis of the financial statements. They are knowledgeable of the business and economic activities and accounting activities of the companies, and they are willing to study the information with a reasonable diligence. And they recognize uncertainties inherent in the measurement of the amount based on the use of estimate judgment of future events. And they understand the financial statement are prepared, presented, and audited to the level of materiality or level of materiality. Yeah, this is the professional judgment. So where the professional judgment is applied. So item considered to be material. So misstatement, omission influences the economic decision. Judgment about materiality affected by qualitative and quantitative factors. Judgment about material matters. So based on the consideration of the common financial information needs of the users. So there are three types of materiality which is defined under SA 320. One is materiality level at the top, which is called financial statement level materiality, then specific materiality, and then performance materiality. So the next, the how the financial statement materiality is computed. So this is the level which represents the significant level in the FS of the company, which can influence the decision making of the users of the financial statement of the company as a whole, and just by the auditor appointed by the company. So suppose if we are doing the audit of financial statements, which is not into profit. So, I mean, how the materiality level should be computed. So whether it is a profit level, loss level, or at the equity level or revenue level. So this is the debt level where materiality level is computed. This is the specific materiality. So specific materiality refers to the materiality level set in order to identify the potential misstatement that may exist in case of the certain different specific areas in the company and for certain classes of transactions. So this is the basically we can say this is small materiality than the performance than the financial statement level materiality level. It is more is related to the account balances. So this is the performance materiality. So performance materiality at less than the materiality for the financial statement. It is computed on the basis of the materiality computed at the financial statement level. And amount set by the auditor, the probability that the aggregate on uncorrected or undetected misstatement exceed the materiality for the financial statement as a whole. So there are various factors which can affect the performance materiality level. One is expectation to the misstatement regarding current period. And if there are any prior period misstatement which are accumulated and being carried forward, that is also one of the factor which is considered before deciding the performance materiality level. Then number of journal entries, whether there are a lot of manual journal entries or there are user generated journal entries. Then understanding of the entity, reliability of internal controls, and the risk assessment procedures. So basically, before this start the computing of the maturity level, so there is another standard which is 315, identification of risk of material misstatement. So there, normally auditor assesses the inherent risk and control risk environment of the company, and then assess the combined risk assessment considering the inherent risk and control risk. So on that basis, the maturity level is applied on the specific classes of transaction or account balances. So performance maturity level to which an audit is performed. So this is the level below the financial statement maturity level, and therefore it impacts the audit evidence, sample size calculation, substantive analytical procedures. So our test of control and test of details all are dependent on this performance maturity level. So there are various benchmarking, benchmarking which is there for computing the material level at the financial statement as a whole. So benchmarking can be revenue, it can be profit before tax, it can be assets or equity base of the entity. So it all depends, whether company is into the profit or what are the expectation of the users of the financial statements. So if there is a suppose private equity which is more focusing on the EBITDA, then EBITDA should be the benchmark. And if there is a company which is making in profits continuously for 3-4 years, then profit should be the benchmark. And if there is a company which is at the break-even level, so their revenue should be the benchmark. So it is all defined in the standard. Which all benchmark you should use considering the various scenarios applicable for the company. So it may happen that if you are doing the audit of main company and the subsidiary company, so for the main company, you can apply this benchmarking on the basis of the profit level. And for the subsidiary company, it can be basis on the revenue or maybe on the assets since the company is not in the profit. And so these are the various factors which affect the benchmarks. So one is volatility of benchmark, then ownership structure. What is the ownership structure? So if it is a public interest entity or it is a private limited company, so again it depends. Then maturity level, the benchmark will be different. Then volatility of benchmark, of course, needs and expectation of the users of the financial statements. Then various elements of the financial statements, and then attention of the users. So these are the factors which affect the benchmarks for computing the maturity level. So as and when the audit progresses, so if auditor comes to the conclusion that there is a difference or there is a material misstatement can be there, then auditor need to revisit the maturity level. And it may also happen that maturity level is computed on the basis of the projected financial statement. And if the actual financial statement is, differs the more of by a significant amount, then also they need to recompute the maturity level. And then of course revisit the various audit procedures. So if the auditor concludes that a lower maturity for financial statement than the one initially determined is appropriate, the auditor shall determine the need to revise the performance maturity level. So again, it depends upon how the audit progresses and what kind of material misstatement is found by the auditors. And if there is any change in the financial statement, then auditor will change the maturity level. Then this is the documentation which is defined in the standard. What kind of documentation needs to be maintained. So one is documentation at the maturity level in the financial statement as a whole. Then of course performance maturity level, and if applicable, then the maturity level of the classes of transaction or account balances or disclosures. And then any revision if happened, then document the revisions. So this is the documentation requirement. Yeah, so this is from my side on the maturity level. So this is the standard, which is a brief standard on maturity level.
Sir, can you hear me?
Yeah.
Sir, can you hear me?
Yes. Yes.
So you are through with your deliberation?
Yeah. Yeah.
Acha. So there are two questions
Yeah. Please.
relating to this. This is relating to the sampling. Would you like to give your expert opinion on sampling, sir? Because sir has already left.
Yeah. Yeah. Please.
Ji, sir. One question is, sir, what should be the sample size based on the different frequencies of control?
So it depends. Suppose if the controls are exercised on a routine basis, like revenue, and there are a lot of invoices which are issued on on an hourly basis, on a daily basis, and there might be control which is performed on a monthly basis, on quarterly basis. So it all depends upon the frequencies. So if in case of routine controls, frequency side, this control size should be 25 samples.
So according to you, on what basis do we conclude a deviation to be on anomaly? Is it just professional judgment, or do we need to perform some procedure to conclude that?
So to conclude anomaly, so of course, when you do the control testing, then you will find that whatever the control is designed or what is explained by the management while designing the controls, and if you find the implementation is totally different, then you can say, yeah, there is an anomaly in the design and the implementation of the controls. And if those anomaly is affected, affect your financial statement, then you will consider whether you need to increase the sample size or not. So there might be case where there is an anomaly between the design and the implementation, but if it is not affecting your financial statement, any account or any class of transaction, then there is no need to change the sample size.
Sir, again regarding to the this sample size, what is the ideal sample size for audit of any type of organization?
So it all depends. I mean, when we do this sampling for the control testing, so it all depends on the classes of transaction, what kind of class of transaction is there, and whether control frequency is monthly, weekly, on daily basis, on hourly basis, or quarterly basis. It all depends on all these factors to decide on the sample size. So one basis doesn't fit to all kind of class of transaction, all kind of controls.
What factors we should keep in mind while auditing relating to this essay relating to the materiality while auditing the books of accounts? So the one member is asking about your expert opinion in a gist. What factors one should keep in mind to check the materiality?
What factors for which thing?
While auditing, what factors one auditor should keep in mind for this essay relating to the materiality?
See, materiality is all depend upon the kind of the company which you are auditing. So first of all, and what are the expectation of the users of the financial statements? Suppose if there is an entity where there are a lot of loans are there from the public sector banks or maybe some private sector banks. So of course the main user of the financial statement besides shareholders would be your lenders. Then what are their expectations? Their expectation is the continuing cash flow. Similarly, there is a company, the private equity firms, private equity, where their main focus is on EBITDA. So then EBITDA should be the main concern for your materiality level. So similarly, if there is a manufacturing company where the main focus is on the profits or EBITDA again, then your materiality level would be based upon the profit or EBITDA.
Okay. How to determine materiality level in IT environment, especially under RP environment and API AI applications? Latest is mind control, robotics is in the vogue, is in the next. So how to control this check materiality in the IT environment?
So currently, we all do materiality level on the basis of the manual calculation, depending upon the benchmark which we are using. So it doesn't matter whether there are robotic control or not. So we do the materiality level on the basis of the financial statement and then this account balances.
Okay, sir. And how to decide materiality for a private company which financial statement sales 100 crores, purchase 70 crores, paid up capital 10 crores, bank loan 20 crores, net worth, and what percentage we should take these samples?
See, again,
specific question is there. They are asking the FS sales is 100 crores, purchase is 70 crores, paid up capital 10 crores, and bank loan 20 crores.
See, for a company which is a private limited entity and public interest is not there, so you can take the higher side of materiality level on the basis of the profit. So it can, yeah, it can be 10% of the profit. You can start the 10% of the profit as the financial statement level materiality level, which is generally called planning materiality level. And then even while computing this performance level materiality level, which is called tolerable error in some of the firms, so you can take the again higher side of the 75% of the planning materiality level. So again, it all depends what kind of entity you're auditing, what kind of risk auditor are assessing there. But in case of private limited entity, you can take on the higher side.
Okay, sir. So these were the questions relating to the materiality as well as the leftover questions relating to the sampling. Thank you so much for sparing your valuable time, sir, and letting all of us on.
So this presentation was very, short presentation because materiality, this standard on auditing is a very crisp standard. Unless and until we do the audit, ourselves, then only then we can understand the materiality how it is computed. So otherwise, it is all theory in the standard.
Yes, yes, yes. So thank you so much, sir. On behalf of AASB of ICI, I also extend heartiest thanks towards you for sparing your valuable time, sir. Thank you so much, sir.
Thank you, my pleasure. Thank you.
Thank you, sir. Thank you. Thank you.